Good morning, everyone. I'm sorry. Good evening, everyone. This is Rosalinda Gutierrez from Cypress Hills Local Development Corporation. We have Renee Arlane from the Cypress Hills Local Development Corporation and our guest speaker, Alex Nippenberg from Brooklyn Legal Services Corp. A. I'm going to give you some useful information about homeowner retention options and dealing with the mortgage servicer. Yeah. Share my screen. So for those of you that don't know the organization, we are the housing counseling team. There are many other divisions in the organization. We are at 3214 Fulton Street. If you need to contact us, that is our office number, 718-647-8100. Cypress Hills was founded in 1983. We're a not-for-profit community-based organization, and we provide many different services for the younger and older residents. We are a HUD-approved housing counseling agency, and some of the services that we offer are for youth and family services, childcare, career education, college success, housing counseling, community development, community organizing, and business partners. You can get more detailed information about all these programs on our website, which is there. In our office, the Housing Counseling Division, we have financial literacy counseling, tenant organizing, tenant counseling, senior housing counseling. The senior housing counseling role is for senior tenants and or owners that are having different housing issues. We would help them in our office. We have the homeowner help desk counseling part where we assist a homeowner with different aspects dealing with their property, trying to refinance, apply for any property tax exemptions, home repairs, if they're eligible for grants or low interest loans. They have some issues with their tenant, and just also giving them information about avoiding different types of scams. And the last type of counseling service that we provide is foreclosure prevention. So to talk about tonight is retention options. What are retention options? These are options that are affordable ways to help you save your home, bring your account current, up to date, and of course, avoid any foreclosure lawsuits and or auction sales. How do we get into these situations? The homeowner will go through different financial hardships. Some common financial hardships that we've seen, loss of income, like during this pandemic, many homeowners were unemployed. There was death of the borrower or of a family member. So that actually caused an increase of an unexpected expense. A medical illness, probably, the borrower or someone, a family member of the borrower has been medically ill, and this person was contributing to the household payments and now they're unable to, or a co-borrower that is no longer in the home and doesn't want to contribute towards the mortgage payments. And also another one is non-payment of rent. The tenant is unable to make rent payments, or they're just not willing to make any rent payments. But those are the type of situations that we've seen that has caused financial hardships for the borrowers. There could be others too, but these are the more common ones that we've seen. So if any of these situations, if you're going through any of these situations, you should reach out to see what type of retention option is made available for you, depending on your mortgage loan, your current financial situation. You would only find this out when you reach out to the mortgage servicer, mortgage company. But it's always best to communicate and again, find out what what resources they have or what options they have for you. Okay, some of these retention options are repayment plans, forbearance plans, loan modifications, FHA insured loans allow for partial insurance claims filed by the mortgage servicer, principal forgiveness or principal forbearance plans, reinstatement of the loan, and the last resort, if none of the above, if you're not eligible for any of the above, the last thing would be a bankruptcy. In order for you to find out which of these options would be suitable for you, we would fill out an application that your mortgage servicer would provide. In this application, we would put information about your current mortgage loan or loans if you have more than one, information about the current property, which would be your primary residence, and if you have other property or properties, all of your household expenses, all of the income you are receiving, and based on all of that information, the mortgage servicer would see which option would be made suitable for you. For repayment plans, you would have to have significant surplus income in order for that to happen. And repayment plans, I think they could range from 6 months to 12 months, depending. The forbearance plans are the plans that many homeowners were able to take advantage of during the pandemic, which they would suspend collecting mortgage payments, not necessarily saying that you do not owe them, but at the moment they would suspend them. They wouldn't, collect them. They wouldn't ask you to make those payments. At the end of those plans, depending on how long your forbearance plan was for, they would let you know, the servicer would let you know if those months would be needed to pay in one lump sum, if they were deferred, or any other, or they were asking you to actually apply for modification because those forbearance would be there's no other deal, so you would have to pay those. The FHA insured loans are only for those certain mortgages that are FHA, and those have a partial claim. Haven't really seen any recent principal forgiveness loans, but it's possible. We could always ask for that to your mortgage servicer. Worst case scenario, they could say no, it's not available. But we will never find out if we don't ask if they would be able to forgive some of the principal, depending on the loan, the mortgage loan, the mortgage investor, and your financial situation. Reinstatement of the loan, if you're able to pay back the 3 months or however many months of arrears that you owe, you could just settle that with the mortgage servicer, and your mortgage would stay the same. There would be no changes on that. I'm sorry, I missed the modification. Loan modifications, it would be a readjustment of your current mortgage when we submit this application, again, based on all of your household expenses, mortgage loan, and your income. If it's, depending also how much you owe, including the arrears, they would make adjustments or, make adjustments to your current principal balance, maturity date of the loan, the interest, and your new principal, interest, tax, and insurance payment. That could be good or not so good, depending again on the amount of money owed to the mortgage company. Because if you owe a little too much, even though the loan is extended, the payments might not decrease as much as the homeowner would wish. The interest rate could decrease or could stay the same, also depending. But that's what a modification is. A modification is similar to a refinance loan, but you're not paying actual closing costs. And the last resort, again, if none of the options above you're not eligible for, you don't qualify for, would be a bankruptcy. And this would be to actually save your home and avoid foreclosure. If that is the case, we would refer you to Brooklyn Legal Services Corp A. They would do a whole intake just to see if you would also be eligible for bankruptcy and which chapter would be best for you. I'm going to talk a little bit about the mortgage servicers. Alex from Brooklyn Legal Services Corp A is going to touch a little bit more on this, but I'm just going to give you a brief of what I've seen. Okay, so I would definitely touch on communication. You should definitely call your mortgage servicer if and when you are going through a financial hardship or financial loss. Some people kind of know ahead of time, if there's going to be a loss of income because their employer has notified them that, they'll be laid off in, future 2 weeks or so. After that, it is advised, and also mortgage servicers do send out notices to the borrowers about contacting a HUD-approved housing counseling agency to get all of the services that you need. And Cypress Hills Local Development Corporation is a HUD-approved housing counseling agency, so you should reach out to us. During this process, it's only useful to gather all of your financial information, any correspondence that you receive from the mortgage company, because that'll only help you and the counselor understand your current situation. Also, I know that it could be really hard or a difficult situation when you're not making your mortgage payments for whatever reason, and some homeowners fear of opening and reading their correspondence, but it's only best to open your correspondence and read them, only because sometimes there are offers that are given to the borrower without submitting any documentation, and they have a deadline. So if you don't open this correspondence and you're not fully aware, you could actually miss out on this offer that's being given to you. When you do call the servicer, you should always make note of who you're talking to, the date and the time, because sometimes, every time you call the mortgage company, you will be talking to a whole different person unless your loan is assigned to a single point of contact. Then you will only be talking to that one person. Also, when you do talk to them for, this non-payment, it could be very overwhelming, but stay calm, inform them again of your situation, ask for options and resources that they might have, take good notes, get the name of the representative. And remember, the foreclosure process is a lengthy process. You will not lose your home if you're proactive in trying to find a solution. Like I said, the last resort is a bankruptcy. So, and New York State is a judicial state. So we will, refer you if worst case scenario comes to that point that you are receiving a summons and complaint. We will definitely refer you to legal services to get the advice you need and to file an answer, because that's the first step. And before passing it on to Alex, just want to let you know, Cypress Hills Local Development Corporation is here to assist you. We have a tenant counselor, Juana Iris Rivas. We have the homeowner help desk counselor, Shahida Bigum. I am the foreclosure prevention counselor. You could be reaching out to me if you have any issues with your mortgage, Rosalinda Gutierrez, and our housing counseling resident director, Renee Arlane. Here's our number. Call us for an appointment. Call if you have any questions, even though you probably already reached out to the mortgage company, or if you already received any type of agreement and you're not sure, you can reach out to us. We can help you understand what the mortgage company has to offer you, and to see if that would be in your best interest. So again, any questions, let us know, and I will pass it on to Alex.
Good evening, everyone. Let me just put my PowerPoint in. Right, good evening, everyone. I hope everyone's doing well today. My name is Alex Knippenberg. I'm a staff attorney at Brooklyn Legal Services Corporation A. Today I'm going to be talking about mortgage foreclosures and what you can expect at the end of forbearance. Just go. Okay. I will talk about Brooklyn Legal Services Core Pay Services, how we can assist you, what we can do for you. Then I will describe, forbearances are ending soon, what you might expect from your mortgage servicer and what you can do. And then I will be touching upon loan modification process application, what to do if your servicer is being very difficult with you, if you're not reaching any positive results. And there are several things I want to talk to you about. Basically, a lot of this depends on what kind of mortgage you have, how to put different complaints to different government agencies, and then what to expect after if you are unable to get a loan modification. In terms of Brooklyn Legal Services Corporation A, we have several different units. I'm an attorney at Consumer Economic Advocacy Program. We deal with foreclosure prevention, where we represent homeowners in all stages of foreclosure, before a foreclosure case is filed, during foreclosure, in settlement conferences, and if necessary in litigation against mortgage servicers and banks. We also do bankruptcy work, where we will file both Chapter 7 and Chapter 13 bankruptcy for our clients. Primary goal of our bankruptcy work is to save homes, and bankruptcy courts have a program called loss mitigation, where you can apply for a loan modification in bankruptcy and save your home in bankruptcy, as opposed to while you're in foreclosure in state court. We also have a lower income taxpayer clinic, where we help individuals settle their debt with IRS and New York Department of Finance. Help you settle your debt, and also if you have any other issues regarding your taxes or IRS, we can help you deal with them. First, just to touch upon the moratoriums and when the COVID-19 pandemic started. Initially, the federal government passed CARES Act, which only affected the fairly backed loans like FHA, Fannie, and Freddie, and you could request forbearances on those loans. Forbearance meaning that for temporarily you don't have to make payments, but eventually those payments will have to be made somehow, but they're not forgiven. Private loan servicers, so which the ones that are not backed by the federal government, would also offer forbearance, although not all of them were required to, but all of them eventually came to offer different kinds of forbearances, where basically very similar terms would be done, where you didn't have to make payments for a period of time during COVID, but eventually payments will have to be made. So now with the forbearance are ending, a lot of homeowners and a lot of people are asking what to do and what is required of them. So as I said, now the majority of forbearances are expiring, and there are several options on how to proceed depending on what kind of mortgage you have. Servicers generally cannot make you pay the entire amount due, even if they try. For federally backed mortgages, it is mandatory that they're not allowed to ask for the entire amount due. But there are a couple of different methods of how you can solve it, such as extending the loan term, putting a balloon payment on the end of the loan, or apply for a loan modification and modifying your loan. If you were in forbearance and you have any questions about what to do now or how to solve, please reach out to housing counselors like Cypress Hills or any of the legal service providers who can guide you and tell you about what you should do. If you don't have a federally backed mortgage, don't panic. New York State passed a law that governs the behavior of mortgage servicers, which are not covered by the federal guidelines. It is known as the Banking Law Section 9X and governs what mortgage servicers must do at the end of forbearance. So it only applies to private servicers. So if you have an FHA loan, Fannie and Freddie, this would not apply to them because they're governed by federal rules, but the federal rules already mandate that they have to assess you for a variety of different options. And this law applies to all mortgage servicers governed by the New York Department of Finance. So the law tells the servicers about what must happen at the end of your forbearance. And, the only requirement is that your forbearance have to be a COVID-19 related hardship. The requirement is very similar to federal mortgage requirements. Um, and here's what the section does. So it allows the board to select one of the three repayment options for COVID-19 related forbearance, and below the specific options detailed. The servicer must extend the term of your loan for the number of the month the loan was in forbearance, number one. Number two, you can repay all of the forbearance on a monthly basis. So make your regular mortgage payment plus a little extra to repay month by month. Number three, you can apply for loan modification or any other loss mitigation options that addresses the borrower's change of circumstances. And lastly, if the board and the lender cannot reasonably agree on a loan modification, the servicer, who is a regulated institution, must offer to defer the amount of the forbearance and put it as a non-interest balloon payment on the end of the loan, which would only be due when the loan matures, whenever that be. So if it matures in 20 years and 25 years or so on. So that's basically the end of forbearance and some of the options that you can pursue if your forbearance is expiring and you're not sure what to do. As I said, please feel free to reach out to anyone as housing counselor or legal services for more information. The next part of the presentation will deal with mortgage servicers and what you can do and expect when you're applying for a loan modification, when you're dealing with mortgage servicers, and what you can do if your servicer is being very difficult and not helping you and not giving you a loan modification, not working with you, and so on. Please do keep in mind that modification is not guaranteed for everyone and might not work for everyone. So just because your servicer doesn't give you a loan modification doesn't mean that they're behaving in bad faith or anything like that. I will talk about why it matters what kind of mortgage you have and how your options depend on what kind of mortgage you have. We will then talk about filing complaints with DFS and Cfpb. I will explain to you what they are. I will talk about what a notice of error is and qualified written request, and how you can get more information about your loan through those resources. Then we will talk a little bit about what happens when foreclosure starts, and lastly, I will touch upon bankruptcy and how bankruptcy can help you. So one of the first things I wanted to mention in terms of loan modifications is what happens when you're denied. The first thing, well, obviously, again, as mentioned before, you should always reach out to housing counselor and attorneys. But the first thing that you can do if you're denied, you can always appeal the denial. The appeal basically states the reasons why you think the mortgage servicer is incorrect and why they should have given you a loan modification. Generally, mortgage companies will give you 30 days to appeal. Some of them give you 15 days. It is always a good idea to send an appeal just to keep record of what is going on and keep track of everything in case, if the case goes further. So why does it matter what kind of mortgage you have? So it matters because that's how you determine what options are available to you. For example, FHA has very strict guidelines which cannot be diverted from. So if your income doesn't meet FHA guidelines, there's not much you can do. So with FHA or with Fannie and Freddie, it's generally pretty clear. We know how their guidelines work, and we can easily tell if the mortgage company is properly reviewing you for a loan modification or if they're not properly reviewing you. based on your income, based on the amount that you owe, and various other things. It's a little bit different with private investors. A lot of private investors, they don't have things like FHA, such as partial claim insurance, or the ability to lower the interest rate. So for example, a lot of private investors will have restrictions that will say we cannot lower the interest rate, or we cannot extend the maturity date of your loan. Therefore, it's difficult for us to give you a loan modification. But at the same time, with private investors, you can always try to go around the guidelines. With FHA, it's strict. You can never divert from the guidelines, and you always have to stick to them. With private investors, although they might have stricter guidelines, you can always ask for an exception, and an exception can be made. So although they might be stricter, there are ways to get around them and try to either decrease the interest rate if yours was too high, or try to extend the term of your mortgage to potentially lower the monthly payment. And as I mentioned, if you are denied, make sure to always appeal. Next. So next thing you can do if you're denied, you can launch complaints with DFS and Cfpb. DFS is Department of Financial Services of New York State, and Cfpb is the Consumer and Financial Protection Bureau. One is the state organization, one is the federal organization. So if you keep getting denied for loan modification, and if the servicer is not assessing you properly, either for your income or for anything else, you can file a complaint with one of those organizations. They're actually usually pretty responsive, as long as your complaint is thorough and outlines how the mortgage servicer incorrectly reviewed you and how you should have been reviewed. After the complaint, one of those agencies generally contacts the mortgage servicer, and eventually, if your issue is correct, it'll get resolved. And oftentimes, the mortgage companies do rectify their mistakes if they exist. As mentioned, make sure you don't submit the complaint just by saying, I should be entitled to a modification, but not provide any reasoning. As a homeowner, you need to be fact specific. State exactly what the problem is, how the mortgage company reviewed it incorrectly for whatever they did. For example, if they did not properly count your income, or if they keep losing the papers you're submitting to them, or if it's a kind of mortgage where like an FHA, where they can reduce your interest rate, but the servicer is not doing that. So make sure to be fact specific and state everything in the complaint. Another thing you can use to your advantage is something called notice of error or qualified written request. It's a very useful tool which you can use to get more information about your mortgage. It's better to reach out to an attorney if you do need more information, because there's specific laws that you have to state when you send out one of those things. It did stem from a financial crisis in 2008 and mortgage crisis that happened after, and everything that happened after. And they are very similar, but they're not exactly the same. One is, so the qualified written request is used to get more information about your mortgage. For example, if you don't have the original note, or if you want to get history, or you want to know the owner, who the owner of your mortgage is, or basically any information about your mortgage, or the guidelines if you're applying for a modification and you're not sure what the modification guidelines are for this particular investor, you can use qualified written request for that purpose. Notice of error is similar to the complaints that I talk about, but here it'll be a specific request that you send to the mortgage servicer, and where you specifically state if they made any mistakes on your account, if they did not properly review for modification, if they lost your payments or any other missed things that they did on your account, you can use a notice of error and send it to them. Both of those things must be sent to a specific address, so you cannot send it just to any Chase or any Mr. Cooper location. Each mortgage servicer has a specific address where you must send one of those things, and if it's sent to an incorrect address, they don't have to respond to you. But if you do send it to the correct address, then the servicer must respond to you within 30 days. If they do not respond within 30 days, they can be potentially liable, and the federal law, which this falls under, creates a private right of action. So it means you can sue them if they do not respond to you, or if they respond with incorrect information, and or if they do things not properly. Then just a little bit, I'm gonna touch upon litigation, and if you're applying for loan modification and you're not getting anywhere, eventually your case will go into foreclosure, and judicial foreclosure proceedings will start against you. So in New York, there are mandatory settlement conferences which are presided by a referee. So maybe before you were applying for loan modification, you kept getting denied, but there was no one to be there to mediate the process. Here, you can have your attorney and the bank will have their attorney, and there's going to be a referee who is going to preside over the whole process. So the referee will, so if the lender does something incorrect, the referee has the power to, perhaps force them to negotiate in good faith or behave in good faith. So, or if the bank keeps denying you for no reason, they can no longer do that when you're in court now, because they do deny you, they need to show all the numbers and everything that goes with it. And the lender does have a requirement that they have to negotiate in good faith with you. If they keep denying you, and if you can show that there is a lack of good faith, all the arrears that have accumulated on your loan can potentially be told. Doesn't mean that your loan will be forgiven, but the arrears that have accumulated can be in certain circumstances. And lastly, I'll just touch upon bankruptcy a little and how bankruptcy can be another option for you, and when you should file or shouldn't file. There are two ways you can resolve your foreclosure problem if you do file for bankruptcy. One way is you can apply for a loan modification just like in state court or from before. The good thing about bankruptcy is, for example, if you did nothing in state court and the bank basically about to foreclose on your house, if they won in state court against you, there's nothing really you can do to stop the foreclosure. The only way to stop foreclosure would be to file for bankruptcy, which stops all state court proceedings, and then you can file there what is known as loss mitigation and try to negotiate your loan in bankruptcy court and get a loan modification there. Obviously, you don't have to wait for an auction date. You can try to do loss mitigation anytime before. Sometimes the advantage is that there's a judge instead of a referee who presides in bankruptcy, and judge there generally has a lot more power, and it's a lot more intense than settlement conferences, a lot more required from the bank to show if they keep denying you in a loan modification proceeding. Another way you can solve is you can simply repay the arrears, but in bankruptcy. A lot of times you ask mortgage servicer if you can do a repayment plan, and they will refuse you unless you make a substantial down payment. In bankruptcy, you can propose a repayment plan for 5 years at 0% interest rate, and the terms out of bankruptcy, a lender would never agree to terms like that. So bankruptcy is the only option where you can do that. It's sometimes good when your arrears on your loan are still small, so that if they're still small, you can quickly repay them in bankruptcy, and then get back on track and make your regular monthly payments. But even if they're larger, 5 year zero interest is still substantial, and obviously it has to be affordable to you as well. To learn more about bankruptcy, obviously feel free to contact legal service providers, or you can still always contact housing counselors to get more information. So that's our presentation about loan modification, how to deal with servicers, and the various things you can do. As you can see, this is our contact information, address, and phone number. Please feel free to reach out if you have any questions or need any additional information. Thank you.
Thank you, Alex, for that information. If anyone has any questions, you guys can unmute, or could just put the question in the chat. It might have been said already, but we do want to let you know that even applying for any type of retention option, it could take a while. The servicers do have 30 days to review the application, the initial application. But if they require more information, like Alex did mention, depending on the investor, that could make the process take a little bit longer than the homeowner would prefer. But again, submitting this application would definitely benefit you as a homeowner, because it only shows that you are trying to resolve this situation, the current situation that you are dealing with. So wanted to know, again, Alex, thank you so much for joining us and the valuable information you have provided. Does anyone have any questions before we end our webinar tonight? Okay, guess not. If you do have any questions, please reach out to Cypress Hills Local Development Corporation, or you could reach out to Alex too, Brooklyn Legal Services Corp A. This information again will be shared on our social media if you need to go back to it and read on our presentations, just to get a little bit more information. I know that it's a lot to absorb in less than an hour, so you could go through you think of anything later on tonight or tomorrow, later on in the week, you could reach out to either Cypress Hills or Brooklyn Legal Services Corp A. Thank you everyone for joining.
Yeah, thank you. Let me say a quick thanks to Alex also, and Rosalinda, presenting a lot of very useful information. Appreciate it.
Thank you, everybody.
Thank you.
The moratorium, which is ending, is it December or January?
It's ending January 15th.
Okay. Do you recommend, because there's usually a list of things that's needed when you're approaching your servicer. What if everything is not, say, perfect, meaning, I guess what I'm trying to ask is it wise to try to work something out for them if your paperwork has maybe a flaw in it? Example, things like your income, if you are if you work for yourself,
Well,
how do you resolve things like that with income?
it depends on your financial situation. The moratorium ending just means that lender can start foreclosure, but you can still, if you're not in foreclosure, you can still call your servicer and ask for more forbearance. The servicers are still giving more forbearance, and it doesn't hurt to ask. So the moratorium just means foreclosure cases can be started, but if the servicer gives you more time, if you don't have enough income right now to pay your mortgage, the servicer can still give you more time to get it together. And it depends on who they are a lot. Some
Yeah.
servicers are still giving forbearances.
Yeah, I was thinking along the lines of, thank you for that information.
Mhm.
I want to approach them, but a lot of my issue is the way I get paid sometimes is monthly, sometimes it's every 2 weeks. It just depends on when my contracts are cleared. I
If
don't get
you-
a paycheck, so it showed in the bank. The last
Yeah.
time I approached them, which was about a year ago, that was a big deal for them because I think they wanted to see physical paychecks, and what I had was references from my bank account. It showed me getting paid that way, but what I'm saying
I
is it
understand.
wise
I
to
understand.
approach them? Is it wise to approach them when you may still have issues along those lines, since
So,
that was their major issue before?
as I understand, you're self-employed.
Yes,
So when you're self-employed, it's fine to approach them and submit a loan modification. You will have to prepare a profit and loss statement generally for 6 months. And when you do prepare profit and loss statement, you will also have to basically submit your bank statements together, and you will have to circle all of your business deposits on those bank statements. And then have a separate profit and loss where you would indicate the deposit, the dates, and then you would calculate the average over 6 month period. So if they're, I understand like you're saying 1 month it's a lot, 1 month it's little, but over 6 months it's going to be averaged out and so on. Um, also feel free like to call Rosalinda. She can help you prepare those things and help
yes,
you.
Miss Rosalinda, I will be calling you. Thank you for your help so far. Yeah, I really would love to approach them now.
Yeah,
And that was
the
just my
the
issue
earlier
with,
the better.
yeah.
Yeah, you could reach out to me. You could call me tomorrow. You have our office number?
I do. Thank you.
Okay, not a problem. All right, well, thank you again. Thanks for joining us. Have a good evening, everyone.
Thank you.
Thank you. Good evening. Take care. Good night.